Hello, everybody, and welcome back to another temporary lecture. In this one, we're going to be talking about the different types of SMTs. And so in the live streams, you may always hear me talk about hidden SMTs, regular SMTs, and normal SMTs. And so in this lecture, I wanted to introduce to you guys what qualifies as a real SMT to me, as we went over in the last lecture. And this one's going to be what qualifies as a confirmed SMT. And so there are three main types of SMTs that I will personally pay attention to. The first kind of SMT that I'll be talking about is the hidden SMT. And the reason it's called a hidden SMT is because it is an SMT between candle bodies. And this is something that not a lot of people are able to spot, because otherwise, when the wicks are present, they would not be paying attention to this. So for example, if I had some wicks on these highs here, right? So say these candle had some wicks, and what the regular trader that is uninformed in terms of this kind of SMT, what they will see is that they'll see that both candles took out the high of the previous swing point. But in this case, it's qualified as a hidden SMT because you have an SMT divergence between two candle bodies, right? And so whenever we're referring to hidden SMTs, once again, you want to look at the candle bodies. And so what I mean by this is typically all you want to see to create this SMT is where one correlated asset, closes above the previous swing high of the candle bodies. And then the second asset fails to close above the swing high of those candle bodies. And so when one closes above the bodies, one fails to close above the bodies, that is your hidden SMT. So if I were to add a vertical line here, so let's say that this vertical line delineates the separation between quarters. So let's say, for example, on the left here, you have Q1, and on the right here, you have Q2. So what you're going to want to do is you're going to mark out the high of the candle bodies of Q1, for example, in this example, and then you're going to mark out the highs of the candle body for the second correlated asset, also the candle bodies. And so once again, you can see here on the right side of this first diagram here, it closes above the candle bodies. The second one, it fails to close above those bodies. And so whenever you have this, this is highest probability SMT when it comes to liquidity. So when you have a closure and SMT between bodies, that is the highest probability SMT you can have. The second type of SMT that I'm going to be talking about is a regular SMT, or this is what I call a regular SMT, because if this does not happen, I basically do not count it as SMT. And so that's when you have a wick to body SMT. And what do I mean by this? Well, just like our hidden SMT, let's say this vertical line right here delineates the separation between quarters. So the quarter on the left here, you would draw out the high from the wick, right? And look if you have SMT with that. Well, to the regular person, it may look like there is no SMT, once again, because the wicks could possibly have taken out the highs altogether. But how we identify the wick to body SMT or regular SMT is when you have a candle closure above liquidity or below the liquidity. So now we're referring to the wick as liquidity rather than the candle body. So in this case, if you have the asset on the left here, this diagram, it fails to close above that liquidity, and then on the right here, it closes above it, then that is what I count as a regular SMT. And so sometimes you may see people get confused why I'm using this SMT. Well, the reason is because one closes above liquidity on the right here, and one fails to close above liquidity, and both of them end up just trading above it because you have a wick here as well that trades above it. But once again, we're paying attention, wick to bodies, right? So on the left side, we're using wicks as liquidity. On the right side, we're using bodies as the confirmation. For the hidden SMTs, we were using the bodies for liquidity and also bodies for confirmation. And so how you'll see me label the regular SMT is you'll often see that I label it as just the letter B, just to represent wick to body. So let's say this is a 15-minute SMT, then I would just annotate it as a 15-minute period as a space. I just think it's cleaner. So period, and then B, and then SMT. So that's how I would annotate this SMT. 15-minute wick to body SMT, and that's how I would label it. Same over here. 15-minute wick to body SMT. And I think it's just a little cleaner whenever you have a short way to annotate your charts. As for the hidden SMT, it's pretty self-explanatory. It'll just be the letter H, but I just pretty much came up with the letter B, so it's easier to annotate our charts. And last but not least, we have our normal SMTs. And this is the last type of SMT that I will look at. However, majority of the times I do not use wick to wick SMTs because personally, from my experience, it's been very low probability. So the only types of SMTs that I use is either hidden SMT or wick to body SMT. And so here you have a wick to wick SMT, as we all know, where you just pretty much, let's say this line here is once again delineating the separation of quarters. On the left here, you would use your wick as liquidity, and on the right side, you just use wick as confirmation, right? So in this example here, it's a normal SMT. So one market trades into that high with a wick. The other one fails to trade into that high with a wick, a body, or anything at all. And so that's just a regular SMT in my opinion, or a normal SMT, sorry. And then we're just using the wicks to pretty much confirm that. The only time that I would use a wick to wick SMT is if you have lower time frame stacked SMTs confirming the wick to wick SMT, or you have intermarket SMT occurring. And I'll be teaching intermarket SMT later down the road, but for now, just solely focus on one asset class because it's very important that you're able to spot this within your market and then start to branch out to intermarket analysis. So that's all for this lecture. I know it was a short one, but I just needed to show you guys how I like to confirm my SMTs and what qualifies as different types of SMTs. So make sure you go into your own chart and start to annotate these as well. And now that you know what real SMTs look like, you know how to confirm SMTs as well, you should be finding a lot of success in your trading now. So make sure you backtest this because if I were to say one thing's the holy grail, then SMT is the holy grail. So on that note, have a great day.